Good afternoon, and thank you for joining me today. Today we are going to be talking about managing the money, how to count it, keep it and invest it. We will be focusing most on the counting and the keeping for the moment, and we will talk a little bit about investing. So my name is Angela Turton. I am a senior partner with Action Coach, and this masterclass is in the latest of a series of weekly webinars that we are running to help business owners through the crisis and beyond. So just first of all, a little quick bit of housekeeping. I wonder if you could just let me know that you can hear me. So if you can you raise your hands? That is found in the... Thank you. And if you can see my slides with a lovely picture of me on it, then again, can you raise your hand? Again, thank you very much. So you've all found the raising hands box, and you hopefully found the chat box and the questions and answer box. So please feel free to put any questions in there. Now, I know this is a subject that can be quite difficult, so if I'm going too fast or too slow, please let me know, and we can adjust accordingly. So why now? Why are we talking about money now? Well, quite frankly, because it's important. Because it's important now, and it's important every day. If you are in business, then you need to be looking at your money. You need to look at your numbers, because your business will only speak numbers. So how good are you at knowing what your numbers are telling you? If you've got any experience, or if you've got any comments that you want to put in about, what your level is on, how good you are at reading what you've got in your business, then please pop them in, pop it in the chat box. And I love this picture. I found it a couple of years ago when I was doing a seminar when I had my accountancy practice, and it just makes me laugh with these two very typical accountant guys with their mugs saying "I love tax" on it. But that's not what I'm going to be talking about today. So what I'm going to be covering is what your financial reports are telling you, and a little bit about that. I'm going to be looking at what the statutory and management information is, so what you need to for compliance purposes, and what you need to run your business. So what information do you actually need to know? And I'm going to be looking a little bit at KPIs. So are you listening? We talk a lot about communication in Action Coach, and this is another part of that. We need to listen to our business. As I said to you, your business will be talking to you at all times. It will be whispering and it will be shouting at you. So you do need to start listening to what your business is trying to tell you. All too often, business owners, especially owner-managed businesses, will rely on their accountants to act as a translator between themselves and their business. And you work really, really hard in your businesses. You're working, some of you are working 60 to 80-hour weeks, sacrificing time with your family and your friends and things that you want to do for yourself. Yet you're not actually communicating with your business. And to me, that's completely bonkers. And so I want to sort of try and give you the notion, if all you leave here today with is the notion that actually it can be easy to talk to your business, you just may need somebody to start that conversation for you. So we are, as I say, talking very simple numbers, most of us, with our businesses. We are not talking about complicated mathematics that you might see on, a big scientific program or anything like the Big Bang Theory. We are talking simple numbers. In accounts, we only actually ever use those numbers that you see on on the screen there, you know, we use 0 to 9. We just move them around. So as long as you can tell the difference, you know, between the number 1 and the number 9, then actually you can read your accounts. So what beliefs have you got around money? If I said talk to you about money, if you've got anybody who's happy to pop in the chat box what their beliefs are around money. So if I said to you the word money, what immediately springs to mind? I'll just give you a moment just to pop that into the chat box. Yeah, we usually hear something like, you know, it's the root of all evil, or money can't buy you happiness, that's not all there is to life, etc., etc. And they're right, you know, it can't buy you happiness, it can't, you know, it's not the be all and end all. It's what makes the world go round. Absolutely. You know, it can't do everything, money, but your numbers will. It's a way of understanding what it is, and it's not the money that you want, but the things you can buy with the money that is important. And quite often, especially if we're talking to the caring industry, quite a lot of coaches have a problem with money, and therefore if they've got a problem, they think money is evil or whatever, then they're not going to attract money into their business. So until they can actually remove that belief, they will not be successful. So that's when we are talking money to people, then that's quite often something where we do start, you know, what do you think about money? So there are two different things we're looking at when we're talking about the money in your business and the reporting and the accounting that you need to do in your business. So there's the things that the state will require of you and the things that the business requires of you. Now, you will need probably to put a little bit of money into paying for those things that the state requires, because you need to get your accounts done properly, you'll need to get your tax return done properly, your VAT return, all of those things that need to be done, and we'll cover that a little bit later, exactly what does need to be done, and that might cost you a little bit of money. But actually, where you need to be looking is at what the business requires of you. Because although that may not cost you a lot of money up front, if you get it wrong, it could be disastrous. And this is what causes most businesses to fail, the fact that they don't actually know what's going on in their business with the money. So your finance function will cover 3 different areas. So first of all, we have the data entry. And this is putting all of the items that make up your accounts into some way of controlling them. And in the past, this used to be great big ledgers, and now it's computer systems like Xero or QuickBooks or Sage. And data entry is the fundamental area that we need to get right, because if we get this wrong, nothing else will work. So it's absolutely the building blocks of what we're going to be doing. And I like to think of this a little bit like Lego. So a friend of ours is building the Death Star out of Lego. Actually, I think he's just finished building it, but he needs every single one of those Lego blocks to be in the right place. Otherwise, his Death Star will look a little bit like a rabbit hole or a hobbit hole or something from Lord of the Rings rather than Star Wars. So he needs to make sure that actually his data entry is really, really right. Everything is in the right place. We then have the role of the business owner to use that data for information and understanding. And lastly, we have the compliance, which is what the state requires of you. So here we have our data entry. The bookkeepers will need to be doing what they need to be doing. We don't use those books anymore. We are very lucky that we do now have computer systems that will take most of it away. Even for a very small business, it's affordable. And even if you're using Excel, it's just so much simpler than when we used to have to write everything out by hand. And I remember when I was training, which is over 30 years ago now, and I had to do an audit of a firm of legal, a firm of solicitors, and everything was on those big books, and it all had to balance to the penny, and it was an absolute nightmare. But now that is so much easier. So it is very, very easy to get this right. So as I say, I just think of it as something, like Lego. If you think of it as you're building a jigsaw or you're building a Lego model, just get every single block in the right place. And then we have your accounting firms, and your accounting firms will deal with anything that you don't have the technical expertise to deal with in-house. So we're looking at things like tax, statutory accounts, payroll, company secretarial, and VAT. And a good accountant will cost you money, yes, but they should also save you money as well. I remember when I first started my practice, and being so pleased that I've managed to get a refund for a nurse, and it was about 7 or 8 grand. Well, that was my fee paid for the rest of the time that she spent with me, because it had been done wrong for all that time before. But a good accountant will save you money, and will actually make sure that everything you're doing is right. And if you're not doing these things right, the HMRC have got some fantastically intrusive powers, so they can come in and they can fine you and investigate. And even if you've done nothing wrong, a VAT investigation will take 2 weeks or so of your life and turn you grey overnight. So it is really important that some of these things are dealt with by the experts. And lastly, there's your role in the business. So you are the business owner, and it is important that as a business owner, you are using the numbers that you are receiving out of the data entry from the bookkeepers and from the accountancy firms, to plan the future, to look at what's going right, to look at what's going wrong, to be able to understand what your business is telling you. And if you don't understand, then talk to your bookkeeper and your accountancy firms, because they will know, or your coach, because they will know what the business is telling you, and they can make it simple, and they can help draw up different types of reports that will help you to understand. So what does the state require from you? We're going to cover this very quickly, because I'm sure your accountants will all be telling you what is required of you. If you are a limited company and trading as a limited company, then you will have to submit statutory accounts 9 months after your year end, and you will have to submit a corporation tax 9 months and 1 day after your year end. So effectively, 9 months after your year end, all of this has to be submitted. But you can put it in the day after. So if you're up to date, then get it done as quickly as possible. And I always say, if you are due a tax return, then there's no reason to delay. Get it done in, get it. Your company house returns, so you will be expected to submit a return to Companies House on the anniversary of your incorporation. And that just tells you who the shareholders are, and if anything's changed, and it requires you to declare who is important in your business, making the decisions to run your business. And then you will be required, if anything changes in your business, to send in returns at that time. So if your shareholding changes, or your registered address changes, anything like that, you need to do that. As directors of limited companies, we all have to do a tax return. So that is something that you will need to be doing. And if you are running your business as self-employed, then then that's something that you will definitely need to be doing. It'll be a little bit more complicated. If you've got lots of different avenues of income, then again it becomes more and more complicated. And if you are running your business as a partnership, in partnership with somebody else, then you have a partnership tax return to return. And you'll have lots of other things that are industry dependent. So for example, if you are doing a lot of imports and exports, then you will be expected to do Intrastat returns. So again, if you're unsure of any of these, then talk to myself or talk to your coach or talk to your accountant, who will make sure you know how to do it. There are quite complicated rules on statutory accounts and corporation tax returns. If you've got an extremely simple business, you can probably do it yourself. But the rules are there to allow a user to compare different companies. So there are quite complicated rules about when to take income into account in your books, and also you know, what profit you can have. And so when you're talking about corporation tax, again, you know, some of your profit, it's not as easy as it looks, even though it is a straight percentage of your profit. Getting to your profit can be a bit more complicated, which is where the experts come in. So let's go back to what we do in our business. And it's so easy nowadays. So this is a picture of an old ledger. It's even older than my accountancy experience. So this would be a really old, we used to have to put everything onto these sort of books. And I remember quite a few small businesses would just have a red book that they would write up. And as accountants, we would then translate that into something for their standard year-end accounts. And it was all done, written out. It was all typed by our secretaries on a typewriter. So it was quite difficult. Whereas now we have all these fantastic accounting packages that are very, very easy to use and very simple to understand. And we've transitioned from some things like Sage and QuickBooks, which were on the desktop and were written in the language of accountants and bookkeepers, and therefore not quite so intuitive for a business owner to use. Whereas now we have things like Xero and QuickBooks Online, which are definitely there for small businesses to use. Xero was one of the first to be built with the internet in mind. So instead of a desktop application that has been adapted for the internet, we now have something that was specifically devised to use the functionality of the internet. And it's so easy. It connects to the bank, and you can send your invoices to it straight away. So the whole data entry is a lot easier, and the whole bookkeeping is a lot easier. And this is a snapshot of a company that actually wasn't doing very well, but you can see at a glance your profit and loss performance, your cash flow. So it's really great that you can see that all of this is going on very, very quickly and simply. So bookkeeping is not something to be afraid of anymore. It is something to be embraced. So with that in mind, what I'd like to talk about now, before I go on to talk about the next thing, actually, I just want to check in. Is everybody okay with the differences between what the statutory requirements need and what you need as your business, business owners, or at least the different roles in the business? If there's anybody who I'm leaving behind, please top it in the chat box, and we'll go back over anything. Thank you. Okay. So what I want to talk about now is when things go wrong, and how do you tell if things are going wrong, if your bookkeeping isn't working for you. And this is what I like to call symptoms of chaos. And you can see on the board all of those different things that will happen if you're not quite in control of your bookkeeping. And this is not only the only symptoms, but it's a few of the most common. And one of the things that happens quite a lot is people don't invoice their customers. And it seems bonkers to me, but I have heard of a situation where somebody's gone in, an accountant's gone in to look at a company, and actually they haven't invoiced anything for the whole year. So God knows how they were continuing to keep going. So that is quite serious. But also you can have areas where customers end up being invoiced twice because, again, you're not quite in control of what's going on, and that can really upset customers. They really get not best pleased if you are sending them stuff twice. Suppliers, if you're not putting your invoices through the system, then suppliers get quite cross if you don't pay them. They often put you on stop, which could be serious to you if your operations are critical on when you get your money through. Again, the VAT bill comes as a shock and you're not expecting it. It probably means that something's wrong. Your tax is higher if you don't have the cash and you thought you would have. You don't know where it's going. And this last thing, this thing at the bottom, itchy feeling that figures are not right. I had, when I had my practice, I dealt with a lot of clients, so actually not a lot, but at the beginning, when I was first working with them, they would be looking at me and saying, well, this doesn't look right. And then when we'd investigate further, it's because they weren't telling me something. So I would quite happily produce a set of accounts that were complete bonkers because the business owner hadn't actually told me things and things weren't going through. But as a business, if you see something and it's not right, that you need to say that. You need to actually work on your intuition because you know your company's best. So if something is looking wrong on your in your books, then it almost certainly is, and therefore you need to investigate what it is about it. So there's just a few things that can go wrong, and some of these are quite minor. But if taken to the opposite extreme, they can shut down your business. So what do we do? So we'd go in and we'd investigate what was causing these problems. And almost always it was because the controls were not in place, because your system was not effective, because you weren't performing bank reconciliations every month, because management actually weren't involved in the process. They were abdicating to somebody very, very junior who perhaps didn't have the qualifications or the experience that they knew what to do. They didn't have buying controls in place, so people were just spending any which way they wanted to do. Maybe their price calculations were wrong, so they were charging the wrong amount of money for things. All of these things happen. Theft and fraud does happen, but it's not as common as we would think. It's usually, if books are wrong, it's usually because the systems aren't in place and things get forgotten. And if we go back to our Death Star that we're making out of Lego, if we forget to put bits in, then we end up with something that doesn't look like it should do. And as I said before, you end up with something that looks like something out of Lord of the Rings rather than something out of Star Wars. So it's it's usually because the Lego blocks have got lost or mixed up. So what do we do about that? Well, it's quite easy. We put those things in place. We put our controls in place. We get management involved. We get a system that will work, and we get controls that make us monitor the system in place. Now, I'm not particularly good at mental arithmetic, but what I am good at is I make sure that I put a control in. Every time I devise a spreadsheet, I put a control in place to make sure that I've put the right formulas in place. because that's something that can happen very easily. And then, you know, you're reliant on Excel spreadsheets that have got a formula in that's wrong. So it's little things like that, just getting a control in place. You know, if you're doing a lot of manual invoices, it's making sure that those manual invoices go somewhere and are controlled. And then, you know, that it may be a paper flow, it may be a computer flow, but whatever it is, that the system works, and you get the controls in place to make sure it works all the time. And the bank reconciliation is one of those measures of control, because if you do a bank reconciliation, especially if you're paying for things through credit cards or debit cards all the time rather than cash, you will find that everything gets picked up, because your bank reconciliation will show you that things are not being looked at or not being entered, because you've suddenly got entries on your bank that you haven't got in your system. Train and qualify your staff. Obviously, you know, if you're a one-man band, you don't need a chartered accountant sitting in your office doing these accounts, which have got 2 or 3 invoices every day. But you do need to get an appropriate qualification. Not an appropriate qualification, but you need to know what you're doing. So somebody needs to be trained in how the system works, in what your accounting package will do for you, and in what controls are in place. So numbers are a little bit like toddlers. If you take your eye off them, they go haywire. But as soon as you start talking to them and interacting with them, it can be very, very rewarding. So the next stages for you in your business are to evaluate what you're doing right now, what your current accounting system is doing, who is doing what, when, where, and why. And then think, is that enough? Have I got enough controls in place? Am I getting enough information out of my business? And once you're happy that you're getting enough information out of your business, you can start using that information to run your business properly. So what information do you need to run your business properly? So you can get 4 main reports that we at Action Coach, and in fact most accountants, will be looking for. 2 of those look to the past, and 2 of them will look to the future, which hopefully is a little bit more obvious here. So the profit and loss account is a detailed look at the things my business has done, it's earned or spent in the period under consideration, which means I might be looking at May. So I'm in June now, and I look back at May and I know exactly what I've spent and I know exactly what I've earned. And you need to include things in there like items that you have committed to spending, but yet not yet signed a check on. It's a bit old-fashioned, isn't it? But not yet push the button on paying that. And things that you have done the work for but may not have invoiced yet. So that's all that goes in the profit and loss account. As I say, it's over a period of time, whether that is a month, a quarter, a year, 5 years, whatever. Now the balance sheet again is looking at the past, and that is a fixed point in time. And what you're doing then is you're looking at the worth of your business. It's called a balance sheet because it balances what assets you have in the business against the liabilities you have in the business, or the total funds of the business against the shareholders, what the shareholders' funds look like. And it is at a point in time. So it's typically the end of the month. So at the end of May, I looked at my business and I said, this is who I owe money to. This is who owes me money. And this is where my money is hiding. So your money might be hiding in things like stocks. It might be hiding in loans to the bank, or, you know, that loans from the bank. It might be hiding in people who owe you money that that you haven't done anything with, or it might just be sitting in the bank. So the balance sheet is an important thing to look at, because it really does show you the health of your business and how you're doing. And then we look at, and sorry, those two are really easy to get out of your accounting system. You just go to reports in whatever accounting system you are and press the button, and then you have the reports there for you. So they're really easy to find and really easy to get to. And then you have the reports that look to the future. So we're looking at our budget report and our cash flow report forecast. And again, these are not so easy to find, to draw up, because they require the expert knowledge of the business owner to help them work through. And often the business owner doesn't have the technical ability to draw up a spreadsheet that will have this on. So you've then got to have a collaboration between your accountant, your bookkeeper, and the business owner. But it's the business owner who knows what is likely to happen in the future. So your budget report is the bridge between where you are now and where you want to be in the future. It is telling you, it is your roadmap to say how you are going to get from where you are now to what you want to be at the end of the year. So for example, if I'm looking at my sales and I know that I'm making, at the moment, I'm making, I don't know, 10 grand's worth of sales every month now, but I want to increase that to 50 grand by the end of the year. What is that going to look like over the period of time that I am actually looking at? So, you know, July, next 6 months, how is that going to increase? And once you've seen that, you can then start looking at what activity needs to be put underneath that in order to support that growth, and you can start putting that in. And there may be some fixed costs like your rent or your staff or your bank loan interest that you need to be putting in there. And what this will help you to do, I mean, it's not set in stone by any means, and it's something that you can just flex as different things come up, as different opportunities turn up, you can change. But if you then compare what you're doing, so if you take your profit and loss account for May to what you thought you were going to do in your budget for May, you'll be able to see whether or not you're on track to get to where you wanted to be when you set it originally. And I am almost certain that there is no business that I know of whose budget for March and April would have met what their profit and loss accounts for this year were, because things change so much over a very, very quick period of time. So it's not going to be, so a budget is not, you know, you don't have to get it exactly right. It's an indication and it's a way to move forward, and it will give you an idea of what's going on. And then your cash flow report will follow the actual money spent. So if you're looking at your bank loans, the repayment of your loans is very important, that you know what your repayment is going to be for the future. But actually, when you're looking at your profit and loss account, you're only taking the interest on that into your profit and loss account. So the budget may only have the interest that I'm going to be spending on my loans. It might not have the full loan payment, but that will need to be in the cash flow because you need to know how you're going to support your growth. You'll need to go when your customers are likely to pay. So I may spend money today. I might have to pay my staff in June, but actually I'm not going to get paid by my customers for the work that my staff have done until April. Sorry, not April. Thinking back to my accountancy days, until you know, maybe July or August. Or you might have had to buy stock in before, and there may be a good lead time that you have to pay between paying for that stock and actually selling that stock in your shop. and therefore that lead time needs to be calculated through your cash flow forecast. So hopefully that explains what all those 4 main reports are. So as I say, we start when we're looking forward with what the vision is for the business. And those of you who are working with us at the moment will know that we're very big on what is your vision for the business. Let's work that out first. We then draw up a strategy to make that vision happen. So how are we going to get from where you are now to where you want to be in the future? And then we'll start to plan in detail how to get to that work. So that'll be our budget, how that's going to work, and our cash flow, and actually, in very detail, how are we going to get there? Does that make sense? Hopefully it does. So, systemizing the system. And those of you who are on our sales webinar last week will remember that we were talking about systemizing the sales system. Well, it's the same in our finance system. Work out the flow of paper, probably not paper anymore, but from the moment you do, from the moment of your first interaction with your customer, what happens to the workflow in that. And I like to envisage, if I was doing it in paper, how would that work through the system? And most of the time, obviously, it's not in paper anymore, but how would I move it from one desk to another? And that would be the system. So I would start off with the customer places an order, I raise an invoice, I might have a purchase order, and the customer pays. If he doesn't pay, I send him out a statement. So you've got that all written down. It helps if you then explain it to somebody and then use it. Make sure you use the system, and make sure that all your staff are using the system. Because there's no point having it if you're not going to use it. And your processes could be, checklists. There could be people. People are involved in obviously quite a lot of this. Workflow, how is it flowing through your business? What accounting packages you're going to use? And it may be that you need to use a couple of accounting packages to make it work. When I was working in a department, finance department, we actually had to use 2 because Xero wasn't very good at managing stock. So we had a stock package that we had linked onto it as well, so that it worked really, really well, that we linked that up. A number of people will use Xero with a card payments service, something like Go Cardless, which is direct debit something. So it might be that you're using 2 or 3 of these. So work out what your process is. And then we're going to be looking at making sure that is working. Making sure that we have, if you have a big accountancy department, you might be saying, okay, how many purchase orders were you able to put on the system today? When I was a financial controller, this was before my children were born, so 25 years ago, I was in charge of the whole finance department of a motor parts distributor. And one of the things that we were involved in looking at that time, or one of the indications of whether or not the girls were doing their job, was how many invoices they'd actually managed to write up into the book. Now, obviously, that's not quite the same now. They certainly won't be putting it in a book, but it's the same process that you need to be thinking about. How many invoices can I get on the system in one time? But you're also going to be looking at other areas of your accounts to see whether or not the people that are running that are doing their job properly. And this will depend on what your business is. It'll depend on whether you're a one-man band or whether you've got a lot of people working with you. So it just depends what you're doing. And the best thing is to think, what do I need to know? And let's draw up a KPI against that, and to talk to somebody, talk to your coach, your accountant, your bookkeeper about how that will work in practice. Cool. So what do you need to know to run your business? Whatever you need to know. We need to know, again, dependence on your business. So if you are running a service-based business, you will be looking at what your staff are doing. You might be looking at what work in progress you have going through the system at any one time. You might be looking at what your marketing spend is for the department. You know what your sales is, what your sales per professional is, or per product, or per service. These are the things that you see on screen now are things that I think are probably important to quite a lot of people. Obviously, if there's only you in the business, then the top salesperson will be you. So congratulations, you get a prize. But in quite a lot of businesses, that is actually something that they need to know, where the sales came from, and whether or not the salespeople are doing their job properly. So it's a good thing to look at. Departmental profit. Now, departments could be 3 completely separate departments that could function independently of each other, or they might just be a way of working out the different products that you have. When I was working with coaches, not sort of consultancy type coaches that perhaps would have a membership online that they would be running. They might have workshops that they're running. They might have one-to-one clients. They might have group clients. And all of these different products that they've got will have a completely different cost base to them. And it may be useful to pull that out into departments so that you know what's going on. If you've got a lot of trying to think of somebody. So, for example, if you're a photographer, you might do a lot of different things. You might have your headshot clinics. You might go out to businesses. You might do landscapes. You might do weddings, and all of these will have different profit margins and different cost bases. And it's good to know what they are, so you can work out what your product is telling you what is the biggest spend. And there'll be, in each of your businesses, you'll be having things that you need to know that's different to the next person. It might be the commission that you're going to receive from different providers. So, for example, if you're running an insurance broker, you may have different commission packages with the different people that you're putting money through to, business through to. If you are just straight sales, then that may not be something. If you only have one product, that might not be necessary for you to do. So it's up to you to decide what is going to give you the information you need to run your business, because we can work out how to get that information out of your accounting system, but you need to tell us what that looks like, what you need to know. Okay. So when you found out what you need to know, when you've worked out, okay, in order to run my business, I need to know which product is working better for me. Decide what you need to know, work out how that's going to do, and then add it into the system. This is something I used to do when I had the practice, and after, as I was doing software consultancy on packages like this, we'd work out, we'd always start with what do you need to know, and then we'd design your package around you. So that's important that we work that way out. Okay, so that's the accounting bit. That's the technical bit, the bookkeeping, the knowing what you need to know. And hopefully you've now got an understanding of how to start thinking about what you do need to do within your business, and how you get from a chaotic situation where you don't really know what's going on to a position where you absolutely know exactly what your business is telling you. You can understand what your business is either whispering to you or shouting at you. All your Lego is very well organized, and you have a beautiful Death Star that actually looks like something from Star Wars and not something from a completely different film. And then you can actually start to using that information. So I said I'd talk a little bit about investing. And what I really want to talk about here is the difference between a cost and an investment. Because we are trained, so many of us, to think of any money that we spend as being a cost and being lost. So you may have noticed when I put up what we need to know, I put up a line that said marketing spend. When I first typed that, I put marketing cost. And then it occurred to me that actually that's the wrong word to use, because marketing is not necessarily a cost. It may be an investment. And the difference between the two is that a cost is lost, but an investment will lead to more income. So for example, I have, if you've got a business that has a salesperson in it, that salesperson should be paying for herself or himself, and actually should be generating money. So that's not really a cost. You are investing in your sales process. And it's quite difficult to move from a cost-based mindset to an investment-based mindset. But it's looking at what it is that will generate more income. So an admin person is probably a cost. However, without that person in there, you may not be able to make the sale. So I'm not saying it's not a necessary cost, but it won't in itself lead to more income. Whereas the money you spend on marketing, the money you spend on sales, and even sometimes the interest that you've having to spend on your bank loans, that's because you have taken that money to invest in the business, and it will lead to more money coming in, more income coming in. So when you are looking at your budget and your cash flow forecast going forward, you need to be thinking not just, can I cut that cost, but if I cut that cost or that line on the P&L or my budget decreases, will that affect my ability to earn? Now, if your admin staff are supporting your salespeople, then yes, they probably will. So you do not want to cut them out, because if you cut them out, the salesperson will have to do their own admin, which means they're not out there selling. So it's a different way of looking at things. You see a lot of people who are saying, I can cut your costs for you. We can all cut costs, but we have to be careful that the costs we cut are the right costs, and that they're not cutting off. We're not killing our golden goose that's going to lay lots of golden eggs for us. And that's about all I want to say in investment. I'm not trained to talk about stocks and shares and anything like that. So I apologise if that's what you came on the course for, but I do know an awful lot of people who are qualified to talk about stocks and shares and investments and pensions and all those wonderful, wonderful things. But that's not what we're talking about here. We're talking about the ability to make money from what is you're spending. Okay, so that is the end of my of my talk. Have we got any questions? Have I lost you all completely, or does what I've said make sense to you? One of the advantages of having been in accounts and having been in lots of different accounting roles is that I've got quite a unique overview of what the accounts position does, and I can help that, and that's what I bring quite often to my coaching, so that I can help people move forward in an understanding. So hopefully that has been good for you. What I'd like you to do next is we will be sending out an email to you today or tomorrow. There will be a link for the feedback. I would really, really appreciate it if you could give me some feedback, because this is the first time I've run this workshop and this webinar, and it would be really good to know for future events, you know, what the feedback is, so that we can make it even better next time. If you haven't already, if you're not working with us already, then please do go onto our website and book your 30-minute follow-on session. It would be wonderful to talk to you about this subject more. If you do have issues, then we are running a money workshop next Tuesday. Now, I'm going to be quite fluid and flexible with that. I'm not going to be writing lots of slides for it, because what I'm wanting to be doing is for you to be able to bring your questions and your issues to the table, so that we can talk about what your issues are, because I think all the knowledge is in the webinar, and the practicalities of how you do it is going to be done in the workshop. It won't be recorded, because we'll be talking about your money, and we don't want to be talking about that to anybody else. So if you do want to take advantage of that, then please do book into our workshop. Again, it's on Eventbrite, and it will be on our link through from the feedback report tomorrow. As I say, it is going to be a very, very practical, all about you session. So if that is something that either you would like to do, or you know somebody who really needs that sort of help, then we've got 2 hours on Tuesday to talk through what you can do to get more knowledge out of your business and your accounts package. I have used a great many of the accounting packages. So although I am have been a Xero certified coach, and that's accountant, and that's the package that I use and love. I have also used lots of other ones, so I can help with lots of other ones. I have also used spreadsheets quite a lot in doing bookkeeping for people. So again, you know, that's something that I've got experience for, if that's the level you're at. So that just if you could follow us on Twitter or Facebook and leave a review, that would be fantastic. If you know anybody else who would benefit from one of these webinars, that would be great. We have in our series, we have looking at what you can do. It's called Twist and Turn. So I think that's next week, where we're going to be looking at what options you've got to change what you're doing now if it's not working for you. We'll be looking at time management and how to structure your time. I've got Rupert giving that webinar because he's fantastic at time management. And lastly, we'll be looking at marketing again with compassion, and then we'll be starting another series for July. So if you would, if anybody you know will benefit from any of those subjects, then please let either us know or them know that we're running them. So that's the end of me talking. If there's any final questions, please put it in the chat box. My number is there, my email is there. Please give me a call if there's anything that I have talked about that you want to discuss further, or link in with me on LinkedIn and send me a message. Thank you very, very much for listening, and I will hopefully see you in person soon, but if not, virtually. Many thanks.